Welcome to Investment 201 with InvestCorp. The type of mutual fund is determined by the objective of the fund and the securities the fund invests in. Now let's consider the common mutual funds we have here in Ghana. Money market funds. Money market mutual funds invest in high quality short-term securities with tenor of 1 year or lower, like the treasury bills, cocoa bills, certificate of deposits, and others. A typical example is the InvestCorp money market fund. You can invest in this fund towards your recurrent expenses like rent payments, school fees, car and home maintenance. Money market funds offers you, the investor, liquidity, as you can withdraw your funds within 24 to 48 hours. An investor who does not want to take too much risk but is looking to invest for a short period should consider a money market fund like the InvestCorp money market fund. Fixed income funds. These funds typically invest in Government of Ghana bonds and high-yielding corporate bonds and other instruments. The returns are typically higher than the money market funds and mostly for the medium to long term. A typical example is the InvestCorp mid-tier fund and the InvestCorp Treasury Securities Fund. These funds can be used as an investment vehicle to help you meet your medium to long-term life goals like starting a business, your building and car projects, amongst others. Redemption from most fixed income funds are paid within 2 to 5 working days. If you are an investor focused on preserving your capital whilst generating income on your investments, look no further than the InvestCorp mid-tier fund and the InvestCorp Treasury Securities Fund. Equity funds. An equity fund is a mutual fund that invests primarily in carefully selected stocks or companies listed on an exchange with the expectation that the stock price will rise in value for capital gains or pay dividends. Equity funds are classified as high-risk investments due to the volatility in the prices of the stocks on the market. Unlike money market and fixed income funds, with equity funds, it is possible to lose a portion of your principal. However, equity funds are rewarding because the volatilities even out in the long term. A typical example is the InvestCorp Active Equity Fund. It can be used to invest towards your long-term goals such as retirement and pension planning. If you are a risk-loving investor focused on investing for the long term, then the InvestCorp Active Equity Fund is for you. Balanced funds. This is a type of mutual fund that invests in a mix of both fixed income securities, that is bonds, and equity, that is stocks of company listed on an exchange. Balanced funds carry a relatively lower risk compared to a pure equity mutual fund. Investors looking to balance their risk-return expectation to meet their medium to long-term goals can invest in a balanced fund. Whenever you are deciding to invest in mutual fund A or B, ask yourself, how much risk are you willing to take, and does the fund objective fall in line with your personal objective to invest?